Hi everyone, welcome back to Corporate Decoder, the place where we uncover the juicy details behind every corporate filing. This week we're diving into Amphenol Corporation's latest announcement, and let me tell you, it's all about the money, and some serious long-term debt. Stick around to see what those numbers really mean for this tech giant. Alright, we're looking at a Form 8K filing from Amphenol Corporation. Now these 8Ks are like the company's urgent news bulletin. They report on major events that shareholders really need to know about, like a big acquisition, a leadership change, or in this case, their latest financial results. It's filed with the US Securities and Exchange Commission, or SEC, which is basically the watchdog for all public companies to make sure they're playing fair and square with investors. Amphenol is putting out an urgent report to let everyone know about their financial performance. The date on this is July 23, 2025, and it specifically covers their results for the quarter and the first 6 months that ended on June 30, 2025. Think of it as a mid-year checkup for the company's financial health. Now, Amphenol isn't just any company, they're involved in making connectors and interconnect systems. You might not see their name on the products you buy every day, but chances are their parts are inside your phone, your computer, your car, and even in high-tech military equipment. They're a big player in a lot of industries. One of the key things this report highlights is something called senior notes. These are basically IOUs the company has issued. Amphenol has these notes that mature in 2032, meaning they promise to pay back the money they borrowed by then. The interest rate on these is 3.25%. You'll see their common stock trades on the New York Stock Exchange, which is a pretty big deal. The meat and potatoes of this filing is right here under item 202. This section is almost always about the company's financial performance and condition. They've released a press release, and that press release is attached to this filing as Exhibit 99.1. When they say it's incorporated herein by reference, it just means you should consider everything in that press release as part of this official report. So on July 23rd, 2025, Amphenol put out their official statement about how they did financially for the second quarter and the first half of the year. This is where we get the actual numbers they want us to see. Now, you'll also see a lot of legal language in these filings. They talk about forward-looking statements. This is basically a disclaimer saying that when they talk about future expectations like earnings or growth, they can't guarantee those things will actually happen. There are always risks and uncertainties, and they list a bunch of them. They mention that you can find more details in their annual report, the 10K, especially in the risk factors section. It's their way of saying, hey, we're making educated guesses about the future, but a lot of things could go wrong, and we want you to know that. They also make a point of saying that the information in this part of the report, even though it's important, isn't considered officially filed in the same way as other parts. This is a technicality that affects how legally responsible they are for that specific information. It's a bit like saying, we're telling you this, but it's more of a heads up than a binding promise. This is where we find the actual financial results. Exhibit 99.1 contains the press release. Since the filing itself doesn't have the detailed financial tables, we have to rely on the press release to get the key numbers. Companies usually present their most important financial highlights here. There's also mention of an interactive data file, often in XBRL format. This is a way to make financial data machine readable, meaning computers can understand and process it automatically. It's part of making financial reporting more transparent and easier to analyze. And finally, the signature, Craig A. Lampo, who is Amphenol's Senior Vice President and Chief Financial Officer, signed off on this report. This means he's officially confirming that what's presented here is accurate to the best of his knowledge. It's a validation from the top finance person in the company. Now let's dig into what those numbers might be telling us, even though the actual press release isn't directly quoted here. Based on the typical structure of these filings, Amphenol is likely reporting on their revenue, their profits, and perhaps some key balance sheet items. When we talk about revenue, we're essentially looking at the total amount of money the company brought in from selling its products. For a company like Amphenol that makes components for so many different industries, their revenue can be a good indicator of the health of the global economy, especially in sectors like tech, automotive, and telecommunications. If their revenue is up, it suggests these industries are buying more, which is generally positive. If it's down, it might signal a slowdown in those areas. Then there's profit. This is what's left after Amphenol pays all its expenses, like making the products, paying its employees, marketing, and so on. A strong profit margin, meaning a high percentage of revenue that turns into profit, is always a good sign. It shows efficiency and pricing power. If their profit isn't growing as fast as their revenue, or if it's shrinking, it could mean their costs are going up faster than they can raise prices, or perhaps they're facing tougher competition. Amphenol also likely discussed their debt. The mention of those senior notes due in 22 tells us they use debt to finance their operations or growth. Debt isn't inherently bad. Many successful companies use it. However, we need to see how much debt they have compared to their assets and profits. If their debt levels are very high relative to their ability to generate cash, that can be a risk. It means more of their earnings go towards paying interest, leaving less for reinvestment or paying shareholders. The interest rate of 3.125% is relatively low, which is good, but it's important to see the total amount of debt. Warren Buffett often talks about looking at a company's return on equity. That's how much profit a company generates for every dollar of shareholder money invested. A consistently high return on equity suggests a company has a strong business model and can efficiently use its resources. We want to see if Amphenol's return on equity is healthy and, more importantly, if it's improving or declining. Another thing to consider is how well Amphenol is managing its working capital. This involves looking at things like how quickly they collect money owed by customers, accounts receivable, and how quickly they pay their own suppliers, accounts payable. If they're collecting cash quickly and paying suppliers on time without hurting relationships, that's a sign of good financial management. A build-up in accounts receivable, for instance, might mean customers are taking longer to pay, tying up the company's cash. From a strategic standpoint, Amphenol's business of providing essential components means they are often at the forefront of technological advancements. If they're reporting strong results, it could indicate successful product development and a strong demand for their new technologies. Conversely, if they are lagging, it might suggest increased competition or a need to innovate more rapidly. The mention of a 3.25% interest rate on their notes due in 2032 is significant. While seemingly a specific detail, it speaks to the company's borrowing costs and their access to capital markets. A lower interest rate generally means the company is viewed as less risky by lenders. Understanding this rate in the context of current market interest rates helps us gauge how favourable their financing is. If the overall economy sees rising interest rates, that 3.125% looks even better. Looking at the whole picture, Amphenol Corporation is a company that is deeply embedded in the global supply chain for electronics and technology. Their performance is tied to the broader economic trends in manufacturing technology and infrastructure. This filing is a snapshot, and while it doesn't give us the full picture without the press release details, it tells us that they are actively communicating their financial state. Now, for my take on Amphenol based on what this filing suggests. The fact that they are filing an 8K specifically to report financial results means they are likely sharing information that they believe is important for investors to know, possibly positive news. The mention of senior notes maturing in 2032 with a 3.25% rate indicates they have secured longer-term financing, which can provide stability. However, the lack of specific numbers here is frustrating from an analyst's perspective. We need to see the actual revenue growth, the profit margins, and the debt-to-equity ratio to truly assess their financial health. One of the biggest risks for a company like Amphenol is the cyclical nature of the industries they serve. A downturn in the tech or automotive sector can hit them hard. Also, global supply chain disruptions, which we've seen a lot of recently, can impact their ability to produce and deliver products, affecting their financial results. On the flip side, their diversified customer base across many industries is a strength, helping to cushion the blow if one sector experiences a downturn. To conclude, this filing is essentially Amphenol telling the world that they have news about their financial performance, and they are sharing it via a press release. The key takeaway is that investors should be looking for that press release to understand the actual numbers. Based on the filing structure, it seems they are highlighting their financial condition and upcoming obligations like their 24th E2 senior notes. Without the actual financial results, it's hard to give a definitive rating, but their continued operational updates suggest an active and communicative management team. Alright, that's our breakdown of this Amphenol Corporation 8K filing. On the surface, what's your take on what this filing might imply about the company's future? Drop your thoughts in the comments below. If this analysis was valuable to you, hitting that like button really helps the channel. And of course, subscribe for more deep dives into corporate filings. Don't forget to join our Discord community. The link is in the description for even more discussions. Thanks for watching, and we'll see you in the next video.